And to the money desk now, Devon Morgan is with us. So, Devon, it seems that another bank has seen its profits jump.
Yeah, indeed. It's the theme where we're taking a look to see exactly how consumers are doing by looking at banks. It's a good indicator. So, a Standard Bank seeing a jump in its profits. I want to speak now to Tshabalala from the Standard Bank Group. He's the Standard Bank Group CEO. He joins me now to talk about those results further. Thanks indeed for your time. So we've seen other lenders saying that people are indeed paying back debt and loans better than we'd anticipated. Is this one of the reasons why Standard Bank had a good showing today?
Evan, first of all, thank you very much. It's such a privilege to be with you. Yes, so first of all, clearly consumer index indicates that consumers are a lot more confident. That's the first proposition. Secondly, we saw a decline in interest rates last year, which was very good for middle-income customers. Thirdly, wealthy customers had dividends and interest returns arising from their investments. Job security at the top end of the market was quite secure. And at the bottom of the market, you had people being sustained by pairs as well as by social grants. The consequence of that, certainly in the case of Standard Bank, was a definite acceleration in our lending book, and an acceleration that was very, very similar to what other banks saw and was very similar to what you'd expect given private sector credit extension. Our home loans book, certainly in the second half of the year, grew very fast, as did our vehicle and asset finance book, as did unsecured lending. So in essence, the consumer was very active in the second half of the year.
And it's pleasing to see, particularly given the fact that we've had an incredibly tough 2 years under the COVID circumstances. But having said that, I see you flagged two big risks. One, interest rates, and the other, the Ukrainian conflict. Explain how those two factors are problems or potential issues going forward.
Devon, as far as interest rates go, clearly the world is facing a situation where inflation is on the rise, and wherever you turn, inflation expectations are rising. Likewise here in South Africa. In fact, the conflict in Eurasia is actually illustrative of the potential risks that arise from increases in inflation and therefore increases in interest rates as a response by the authorities. But Devon, from a South African perspective, the interesting thing, though, is that we have not changed our expectations as Standard Bank of the progression of the South African economy in 2022 or of the African economy as a consequence of what we're seeing in the Ukraine and Russia. The large reason for that is because South African trade and investment between this part of the world and that part of the world is not that large. We export less than 0.3% of our total exports to Russia, and we import less than 0.7% of our imports come from Russia, and our investment stock is less than 1.5%. So Russian investment stock is less than 1.5% in South Africa. Indeed, as oil prices rise, however, South Africa is an exporter of commodities. So our terms of trade balance as a consequence of that rise in oil prices. It's also going to be concomitant with a rise in coal prices, for example, as we export coal. However, if the situation deteriorates and becomes persistent, it could then have, that point I was making, a really negative impact on clogging up supply chains, rises in oil prices, gas prices, the shortage of grain, and therefore food insecurity, not just here in South Africa, but in the rest of the continent. So those are the two risks, and I agree completely with you.
All right, so before I let you go, I've got to ask you this. I mean, you have a second Njalo here who's been dragging not just Standard Bank, but 8 others to the Competition Tribunal, saying that, look, why are the banks cancelling the banking accounts of this group? I'm just wondering, where do you stand with this? Because it has come into the news frame quite often recently.
Devon, the banker-client relationship is a reciprocal contract. And it's a reciprocal contract that is driven by trust. and that trust cuts both ways between the banker and the client would be the first proposition. The second one is that we follow that rubric that determines the banker-client relationship, as well as the laws and regulations that pertain to how banking is managed. Thirdly, we are in the business of generating profits. We want client relationships, and we want client relationships so that we can make money. However, those client relationships have to be within the four corners of the law and the four corners of the values and principles that dictate the banker-client relationship. And we apply that to all 16 million customers that Standard Bank has got. And I would leave it at that, as you're making reference to a client, and there are matters that are in the courts that relate thereto, and the principles I've just explained to you will be applied in that conflict in the appropriate forum.
All right, fair enough. Tshabalala, Standard Bank CEO, thanks very much indeed for talking.